Hello everyone, welcome to Fearfully Greedy. In today's episode, I decided to check with you what the big boys have been buying, the big money and fund managers, this from their 13Fs for January 2022, right? So first up we have Charlie Munger, of course the mega chat, 5 stocks, but not for the concentration, which is also great. He also has some international holdings, but for his Baba edition. So he started buying on the first quarter of 2021, then the third quarter when it went down, and then the fourth quarter he is still buying and doubling the position almost every time. So as the stock has been going down, he has kept buying. Baba is this 300 billion market cap company, 100 billion in revenues, like 20 billion in net profits, and they could even have more if they wanted to tap into all the profits, right? At the moment, trading at 17 times P, which is pretty ridiculous for how good the company is. Well, Munger is definitely convinced, and Baba is this mammoth of a company. They are centered in e-commerce and marketplace, and even becoming something else by delving into cloud and as well as other ventures. Of course, the narrative is pretty clear, because if we saw this kind of growth just going up, we would say this company is ridiculous. Like the PE or the multiples that we would see would be pretty high for the future growth that we'll see. But the narrative is that we have these China risks, these governance problems, some of the things we have seen on the last years on the news from Baba, the pledge one, and I don't know, the Jack Ma thing. Well, we had seen something, right, that we probably wouldn't like. As you know, I'm not invested in China for now, but if prices keep going down and they stay this way, I might buy some, right? So I might be interested, because this is too low of a PE for Baba, and it's even lower now, so ridiculous. Then we have Charles Bobrinski, Ariel Focus Fund, 29 positions, 70 million. I don't know, APA or Mosaic or Vogue. So, well, when you see some stocks that you don't even know, it's interesting. I will check them out a bit later. But what he has been buying is REZI, right? And he has been selling Walgreens, right? REZI is pretty funny. Well, it's this 3 billion market cap company. There's some debt in there, like 1.5 billion, 5, almost 6 billion in revenues. Income on the last years, it's been going up. What it is, REZI is the spin-off of Honeywell, and it's their security, fire, and low voltage, like central equipment for your home, right? So those things that they install for the alarm and just these smart homes kind of things. And then they also have a division inside REZI for home air, water, security, energy products, and solutions, right? It's funny because this stock was actually picked to me in summer 2018 in my business, in like where I work during the week. Well, the business I run during the week. It's not related to finance, but the conversation went there for someone that came, and he's a fund manager from North Carolina, and he picked this stock. He said they would do incredible things in the next years. And if you see here, the stock plummets in 2020 in the pandemic, close to $5. It's trading at 24. But what happened for me is that it was hard to value. There was some payments that they had to do to Honeywell which weren't clear. There was like a health like trial on the way, and they had to reimburse them for that. I don't know, it was very hard to value them. Also, if you see, they don't have these huge profits every year for now, because almost the entire profit went to like Honeywell at some point. So I don't know, it's hard to value this kind of companies, right? But very interesting company, and if you see, revenues are very steady, right? And probably there's some modes there. If they sell to professionals that install those systems, if they get used to installing those, probably it's hard to switch, right? That's about what I can say for REZI, right? Then we have Walgreens Boots Alliance. They are a pharmacy, retail pharmacy, and they sell in the UK and in the US. Mostly in the US. They are trying to get away from the UK. Why he sold, as most of the positions we will have no idea. 45 billion market cap, 134, almost 135 billion revenues. Margins, as you can see, they are not anything too fancy, but it's trading at quite low PE, right? Even if it's forward or the current earnings, they look pretty low. It looks cheap, but probably, well, if you are from the US, you will see that this is the kind of buildings they use. And what I'm guessing is there's a lot of competition with these low margins, and also online pharmacies taking, not, I don't know if taking over, but they're kind of entering the market. And although we see growth and revenues going up, profits are not following. Right? If you see here, profits are pretty small, right? Probably the sector heading into some disruption, right? So let's see who is next. John Rogers, Ariel Appreciation Fund, 42 positions, so a bit more diluted, but over $1 billion in assets, right? So Bog Financials, Madison Square Garden, great company. There are some modes here. Let's see what he did. He bought Core Labs Laboratories and KKR. So for the buy, Core Laboratories, what it is the leading provider of proprietary and patented reservoir description and production enhancement service for the oil industry. So they tell you what you have in your reservoir and how to improve productivity. Trading at pretty high PEs, right? It's, I don't know. I don't know if it's a very competitive market. I have to say that I know very little about this line of business, but judging from the numbers, it doesn't look that pretty, right? If you see, revenues have been going down on the last years, profits have been going down and even negative on the last year. The stock has been falling a bit, but also oil has had a great start of 2022, so maybe it's a move in a beaten down stock. But if we see the multiples, it's not that ridiculous, but it's a very small cap. So 1.2 billion, half a billion in revenues. Probably interesting stock to check a bit, right? Because it's probably the smallest cap we'll see in this kind of fund managers. Then KKR, this is the sell, so not too much focus here, but it was known as Colbert, Kravis & Roberts. It's an American global investment company. It manages multiple alternative assets like private equity, energy infrastructure, real estate, credit. And for KKR, I think maybe it's kind of a similar business to Brookfield, but probably in a different line. We'll check Brookfield later, so maybe a bit of a bigger analysis, because as I said, this is a sell. So if we're trying to get guidance from these people, maybe we should focus more on the buys and less on the sells. But sometimes it's interesting to see why people are selling, and maybe you see something different. As you can see, this is a great business. Margins are very high, right? And 38 billion market cap, but 14 billion in revenues, and income over 5 billion, right? So very profitable business. From what I've seen, it seems to be trading at similar multiples to his peers, but it's a very valuable business, so they have a lot of profits, right? So if that's up for disruption or not, I don't know. We would have to dig much deeper. Then we have ClearBridge Investments, 63 positions, so even more diluted, but over 1 billion in assets, right? We see Wells Fargo, American International Group, Bank of America, so a lot of banks, pharmaceuticals. Let's see what they bought. They sold off Southwest Airlines, the Fidelity National Information Service, and they bought FISV. Let's see what those are. First, very quick, so Southwest Airlines, Airlines, of course, first if we see the direction of the stock, it's going down, and then they haven't had the easiest couple of years, and that also shows in revenues. We had the first year with losses on 2021, and I wouldn't like to own it, right? At the moment it's trading at 25 billion market cap. The PE looks ridiculous because they are losing money. Very weird margin, very low margins because they are losing money. They haven't gotten back to the place where we were before the pandemic. So Evan Buffett sold, and the saying in the investment world says that if you want to be a millionaire, start as a billionaire and invest in airlines, something on those lines. So maybe that's true. Not much to say here. I wouldn't like to own this. Then Fidelity National Informational Services. They are a company which does a lot of fintech research, right? So they are specialized in making development for the financial technology kind of sector, and they offer solutions as a merchant for merchants, banking solution, capital market solutions. I need to do a lot of research to see how valuable this was. Revenues have been going up on the last years. Profits, at least they have been positive. They haven't been losing money, but it's trading at current 300 times PE, probably more like on the 20ish side for next year. Who knows? Because those temporary PE is always normalized, right? But 68 billion, so it's not a small cap. 13 billion in revenues. I said the income for the last year was pretty small, right? Not much to say here. I don't have much insight for you, but if you like this kind of sector, check it out. And then we have FISV, 70 billion market cap, 15 billion in revenues. Quite good margins, not like software-like, but pretty close. What they do is this company provides account processing and digital banking solution, card issuer processing, and network service payments. Well, the revenue looks to be growing quite a lot. They have been profitable almost every year, which I like. Trading at current earnings quite high P, maybe next year not so high P. Again, we will have to do a lot of research. One thing I liked is that I checked their presentations from the calls, and they were very cryptic, not saying a lot why they are doing good, trying to hide as much as possible. That for me is interesting, so a company that I will check out for sure. So we'll take a deeper look at it. Then we have Dodge & Cox, 72 positions, so very diluted portfolio, but 95 billion, right? So it's pretty ridiculous. But we have Wells Fargo, Charles Schwab, Alphabet, FedEx, so very high quality stocks. They only did one thing, they added more to VMware. I don't know about this company. 50 billion market cap, revenue of 12 billion, pretty high margins across the board. And VMware is a leading provider of multi-cloud services for all apps, enabling digital innovation and with enterprise control, a leader in server virtualization, which is mature service vSphere. I never heard of this one, but they are competing with Microsoft and Oracle, and at the same time they are clients. So Microsoft and Oracle are clients of them, so their clients would be very high quality companies: Alibaba, Amazon Web Service, Google Cloud, IBM Cloud, for Microsoft Azure and Oracle, right? So even their competitors are their clients, which is very good sign. And for next year, earnings is not trading at a ridiculous P. Growth looks ridiculous, so very constant, pretty profitable almost every year. It's a company to check out. Another one that I'd like to do a deeper look. It's techy, so maybe it goes on the too hard piles, but interesting. I like the numbers. Then we have Richard Sena, Hancock Classic Value, 40 stocks, over 3 billion in assets. Of course, it's classic value because we see GE as the main position. He sold Ford and he bought SSNC, so we'll check those out. So for Ford, I'm sure you all know about Ford, who is in another beaten sector, at least for the last 2 years. They have done good things for the electrical vehicles, but there's quite a way to catch up to the Teslas of the world, right? So 80 billion market cap, revenues 135 billion, over 150 billion on previous years. It's trading quite a big P for how very unprofitable, not unprofitable, but very small margin business. modes that are very costly to maintain. It's not a sector that I like either. And the narrative now is that we are heading to 100% electric in the next 25 or 30 years or less, who knows. Next up we have SSNC, so company with market cap of 20 billion, 5 billion in revenues, quite good margins as usual. It's another software company, and they have this technology stack across securities, accounting, front to back office operations, performance and risk analytics, regulatory reporting, and healthcare information process. So they manage data and some process for their healthcare professionals and financial professionals for their clients, right? So it will be medical data or some private information. So another software company where you have to delve quite deep to see if they have moats, if they are very competitive or not. Growth in revenues looks pretty good. Again, most software companies are growing, which is, I don't know, surprising or not, because they are acquiring each other most of the times. Not sure if this is organic growth or not. Doesn't look that organic here, but maybe it is, right? So next up we have Maersk Power Growth Fund, 51 positions, almost 6 billion in assets. Microsoft, Alphabet, Amazon, looks pretty good to me. We could quit there, right? But let's see what they bought. So they sold Corsair Reality Corp, they sold NVDA, a small amount, and then they bought Salesforce. So let's see. First core site is REIT. So if you are interested in REIT, check them out, how cheap they are. You should check price and funds from operations to see the kind of the multiple that you should extract, because if not, everything looks quite expensive in REITs. And then you have to check the assets. If we see there's like a floor, so maybe they got acquired something, I don't know, I'm not that interested into REITs, so I didn't check them too much, right? So next up we have NVDA. It's a company I've checked from the surface when I was doing some work for my Intel investment. As you know, I'm not invested anymore, and I never went too deep because they are not like such direct competitors. They are this fabless chip designer, mainly focused on graphic and processing units for gaming and professional segments. For this sector, well, first, huge market cap, so almost 600 billion, right? Revenue 25 billion, and very high multiples. NVIDIA has been trading at very high multiples for a long time. If you see lately, they are falling a bit in price, as most things are falling in the last days. But yeah, revenues have been going up. It's quite a profitable business. This fabless model looks always very high margins. A podcast that I would recommend to you, which I found very interesting, is from Acquire, the one they did on TSMC. I'm not sure if they did one on NVIDIA, but the one on TSMC was very interesting and enjoyable. It tells you a little bit of how it works, not exactly for NVIDIA, but how the chip sector works, how they started, how some of the modes are very hard. It takes a long time, a lot of research to build, and once you are over someone, it's hard for them to come back, right? So it's this snowball kind of effect, right? So very interesting. It doesn't look optically cheap. NVIDIA, probably it has huge modes. I don't know, probably in the too hard pile. Next up we have Siriam. So it is Salesforce, great company, 200 billion market cap, 25 billion in revenue. This is their buy, so previous two were sells, this is their buy. Multiple usually over 50 because they just keep going up and up and up, right? Never stopping. And they could be profitable every year, but they keep acquiring and paying up, right? Because what's the point of giving them back money or keeping money on the balance when you can't put that money to work all the time? Paper that was very interesting for me was one on Mark Leonard, the previous CEO. This was sent to me by Guy Spear on his newsletter, and it brought to light why Siriam is this great company, how it has become, how Mark did it. Very interesting. It's called Capital Allocators Culture by Roy Lipovetsky. So check it out, Google it. I will try to link it, maybe his Twitter or something. But the idea on Salesforce, if you like Markel or Berkshire, for the physical world of acquiring this physical business that they just keep building on this portfolio of business, they are doing the same in the software world. That's Salesforce. So they keep acquiring this CRM, previously business, now all software company kind of business, and they improve them, they introduce them in the Salesforce umbrella, and well, very, very interesting, very good company. Then we have Steve Romick, FPA Crescent Fund, 51 positions, 7 billion, so quite a lot of pennies here. Broadcom, Comcast, Alphabet. Curious, right? So what did he do? He bought Activision Blizzard. So, and he sold he added to CF Financier Richmond, right? So let's check these two out. Probably Activision, you know it, but 60 billion market cap company, revenues of 9 billion, but what happened here is that it just got acquired by Microsoft for 75 billion. So he bought previously to that. Maybe he knew. I'm pretty sure he didn't. But I did some research for this one when I was checking another company that it's CD Projekt. I never bought or anything, but I did some research on the sector. Usually they have quite good margins in this kind of business. It's kind of software, but it's software, right? And modes are, maybe they have more modes depending on the kind of franchise they have. The games that they did or that they do is StarCraft, Overwatch, Diablo, Warcraft. These games have been forever in the market and people love them to death. So those are modes, right? So it's an interesting, very interesting sector. It really appeals to me. I have video game in the past and sometimes I try to still do it, but not so much free time lately. So I'm a fan of Activision, of course. And for Microsoft to acquire it, there's a lot to maybe synergize, to optimize here with their platform. So interesting. Let's see what they do with the Xbox. Let's see, right? Then what's next? Campaign Financier Richmond. This one is very interesting. So they own a lot of great brands. It's very old brands. So if you like watches, Panerai, Piaget, Jaeger LeCouture, International Watch Company. So some of these pop right away. Allianz Song. So very old brands. Pretty good margins. So for a physical goods kind of company, good margins. 80 billion market cap, so it's not your small cap. 16 billion in revenues. I said pretty good margins, trading at 25 or 30 times earnings. I'd say it's as they should, right? As they should be trading for this amount. Very interesting. I think these brands have deep modes and they didn't do too bad on 2020. So this one is 2020. They still turned a profit, and 21 also, which probably weren't very easy years for them. Then we have FBA Queen's Road Small Cap Value Fund, 51 positions, so pretty diluted stock. The stocks that are the portfolios that are very diluted, many positions, I don't love so much. Synaptics, I like that they own this one. Let's see what they bought. They sold Treehouse and they bought OSC. Let's check those two. So Treehouse, they are in the US and they are private label snacking beverages and meal prep. So what they do is, if Kroger or Target or Dollar General need some white brand kind of products, so they want to make some pasta, Treehouse will make that pasta and brand it with their name and sell it to them, right? So pretty small cap, which is interesting to me. Over 4 billion in revenues, income of 51 million, right? Pretty small margin, sorry. I think modes that we can see here is scale one. It's probably they are operating at a very high scale, and there are high replacement costs for this kind of business. So interesting. Good place to check, maybe at the right price, but if you see margins are pretty small, so not sure if I would love to own this one. but an interesting sector to analyze and learn about. Then we have OSC. So what OSC does is they have this. They make specialized vehicles for fire departments, for the airports. So these vehicles that have this job purpose, they specialize in those. 7 billion market cap, 7 billion in revenue, so one-time sales. Margins not too bad, not too great, right? So they're in the middle, 16-time earnings. I'd say probably competition is intense in these ones. I have little idea of this sector, but they seem to be the leader by revenues. An interesting sector to take a deep dive, like more interesting even than car makers, because here they kind of have a niche market, which I also like. So next up we have Wallace Wits from Wits Value Fund, 27 positions, so more concentrated, 1 billion, I like it. Well, Alphabet, Meta and Berkshire, so top 3 look very good and pretty high exposure to those, right? Then Liberty, Shaw, great companies all around. So they sold Aon, they sold JP Morgan, and they bought FISV, right? So let's check those 3 out. First, Aon is a professional service firm, provides advice and solutions to clients focused on risk. So it's insurance broker. I'm not very specialized in insurance, right? It's a sector I would love to get to because they tend to have pretty good margins. There's the float thing that Buffett and Munger always tell us about. They don't specialize in any particular kind of insurance, so they are also companies that usually it's easy for them to get acquired or keep building, not organically, but from acquiring other business. But they have to be very diligent of not messing up with the risk and all these kind of problems that they could have if something bad happens, right? Interesting. Then we have JP Morgan, one of the leading banks in America, over 3.4 trillion assets that they manage. Operations worldwide. They are the leader in investment banking, financial services for consumer and small business, commercial banking, financial transactions, processing, and asset management. JP Morgan, you could check thousands of videos about the stocks. Very high revenues, good margins. Banks tend to have good margins in the States, not the same as we have in Europe, where they are barely making any money. Not sure which one is better. Let's be clear here. But an interesting pick. It doesn't spark my eye because with this market cap, I don't love the mega caps, right? Let's go to Tweedy Brown code from Tweedy Brown Value Fund, 69 position, 400 million dollars under management. They have Berkshire, Google, Nestle, high quality stocks from what I can see. They sold CNPF and they bought VRTX pharmaceuticals. Let's check those out, right? So what happened here is that this company got acquired, right? So I don't know if they were holding for a long time. So this, again, insurance company, and La Banque Postal bought the entire company. If you see here what happened, there was a floor, so they say the price, and the company has been trading at this amount until it finalizes. And the amount was 17 billion, and it's what it's trading at, right? Not the highest margins for an insurance company, but it's trading pretty cheaply. Probably they didn't see a lot of growth, very stagnant revenues and kind of small profits. Then we have VRTX. This is a pharma company leader in cystic fibrosis, expanding into other fields. Very profitable, as most. I haven't seen a pharmaceutical company that is not profitable yet. But these kind of companies, you have to do so much due diligence. It's pretty ridiculous. Even then, are working with changing facts all the time, with very diffuse probabilities of success for each treatment, and after that it's hard to even grasp how profitable, on what scale of profitability it will be. At the same time, you see me being invested in Biogen, which is another kind of this company. So 52 billion in market cap, 7 billion in revenues, 2 billion in net income, right? Maybe I shouldn't take a look at this one, because I will see it's very profitable, but for how long, right? That's the other thing. Then we have Robert Binal. So maybe a mega chat, because we have 4 positions, so very concentrated portfolio, which I love, right? So what he did, he sold off one of the positions. Well, this is because Salesforce acquired Slack, so probably that's the transaction. Let's check them out, right? Slack, probably you know about Slack, so not much to say. Also, it got acquired, 26 billion market cap company. I don't have the exact deal in place. They never made any money, so maybe it's good that they got acquired, but they had ridiculous growth, up and up and up, right? So very, very, very interesting kind of company. Just to think about it, I wouldn't like to invest in it, because it's such volatile kind of thing. It's hard to value all the time. I don't know. But that was Slack, right? And well, it got acquired by Salesforce. We talked about Salesforce before, so let's move on to the next one. Just Tarasov, Greenlee Lane Capital, 9 stocks, 300 million. So not the mega chat, but pretty buff. This dude. What did he do? He sold hubs. He had the same thing, so he sold some. Well, it got acquired and then added to Salesforce, to Brookfield, and to Twitter. Interesting. We won't check all of them out, but first, Hubs, this was a sell, is a leading CRM platform that provides software and support to help companies grow better. The platform includes marketing, sales, service, and website management products that start free and scale to meet their customer needs at any stage of growth. Another company, another software company without probably profitability in sight. Revenues go up, profits don't. Probably they are just focusing on growth. Hard to value this. It goes to the too hard pile, right? Then they bought CRM. We have already talked about them already, so I will skip this one. But if many fund managers are buying one stock, take notes. Check that one out. Then we have Brookfield Asset Management Company. This one is not new to me. I know this one from an independent fund manager that we have here in Spain, Emerito Quintana. He's pretty much married to this stock. He loves it to death. And what is Brookfield is a leading global alternative asset manager with approximately 600 billion of assets under management across real estate, infrastructure, renewable, private equity, and credit. So what they do is they buy these great assets for their clients, and then they manage those, and they get fees from just managing them or just from investing in them, right? 91 billion market cap, very high revenues, very recurring revenues, decent margins, but they have been doing this for decades, and they are finding a lot of capital to be deployed, and they are trading at not too high of a multiple, so very interesting also. And this how they are having growing the fees. That's the main moat that we'll have in this business, that will keep building value over the decades. Very, very good, very high quality company, probably the highest quality company that we have analyzed across all the companies. Then we have Kahn Brothers, 43 position, 700 million assets under dollars of assets under management. NVDA, I have no idea. Assure Guarantee, GlaxoSmithKline, little idea. So he added to GlaxoSmithKline and to Citigroup. Let's check those two out. So this company is a company that has 3 segments. So they have the consumer one, which is oral health, pain relief, vitamin, flus. Then they have the vaccine one, which they are the top pharma company in the world by revenues, meningitis, influenza, shingles, and then they have the pharma one being their biggest segment, like for respiratory, HIV, immunoinflammatory diseases, and they have a quite wide pipeline, right? So another pharma company, which I have little idea. So 113 billion market cap, 40-something billion dollars in revenues, good margins as all the pharma business have. This telling a trend, 19 times earnings, not that expensive, right? Solid earnings, not going up by a lot, but always profitable. So maybe interesting to check it out. They are trying to spun off the consumer kind of segment. They will spun it off mid 2022. Someone, Unilever, tried to buy it, but they didn't sell to them, so it will be spin-offs. If you wanna get into spin-off situation, they will do it, right? So check them out. Then we have Citigroup. So Citigroup is an American multinational investment bank and financial service corporation. If you are in the financial sphere, you will know about them. They are the third largest banking institution in the United States. So with JP Morgan and Bank of America and Wells Fargo. So what happens to Citigroup is that they have a bit lower returns on equity and capital than the other banks. So here, right? So that's why they are trading at a bit lower P, like earnings multiple. But most of the banks in the States are trading at a low multiple, right? So 128 billion market cap, 7 billion in revenues. It's the cheapest, but also for a reason from the banks. Not much else to add for me. Then we have William von Muffling, Cantillon Capital Management. That's a mouthful. 38 stocks, 15 billion in assets under management, so quite a pretty penny. So it's S&P Global, so this is the company that does the S&P. Alphabet, Broadcom, Visa, interesting. So they sold CTXS and they bought EDR. EDR is very interesting. Well, let's check first CTXS. They sold this company, so another software company. They did an acquisition for 2.2 billion in the first quarter of 2021 for VRTX. I'm not sure if I'm pronouncing them properly. Good recurrent revenues, solid margins as most software business have, trading at current earnings quite a big multiple. Forward ones look a bit smaller, but for forward earnings, if you put forward enough, anything is cheap, right? They will tell you it's cheap. 13 billion market cap, 3 billion in revenue, right? I don't know. It doesn't spark my interest so much. What they do is they provide a comprehensive and secure digital workspace, so they have all the apps for your business there, and the data and the productivity, so kind of like a full stack kind of proposition. Let's check the next one. Endeavor Group Holdings. So what this is, you probably know about it. This is WME or WMEIMG, now called Endeavor. They own the UFC, the Professional Bull Riders, the Miami Open, Fierce Art Fair, New York Fashion Week, this kind of things. They also sell sport video programs for their clients like Olympic Committee, the NFL, the NHL, and they also represent actors, directors, athletes, models, and more. It's this business that has never made money, right? But they have these very big assets, quite a lot of debt. I will say they recently acquired a company for OpenBet, so to provide like betting information for 1.2 billion. But it's always that I've never seen a profit with them. But I think the assets, the UFC, will grow a lot in the next years. Interesting, but how do you value this? It's impossible to value. William has done it, at least. So next up we have Robert Olstein from Olstein Capital Management, 102 positions. I don't love so many positions. The position is hard to analyze. so many positions. So what did he do? $3, right? And he bought some MasterCard. I like this buy. Let's see $3 first, right? So $3 is this American chain store. As usual, it has, well, this is how it looks for the Americans. I've never seen one of those. 29 billion market cap, 26 billion in revenues. Pretty small margin, but better than some of the supermarkets and other stores, retail stores. So not that bad. 20 times P, so as a multiple that I would appreciate, and it has had quite a good run up, right? So from 100 to 130, 140 that it's currently trading. So maybe that's why he reduced, because this is his sell, right? Revenues have been going up steady, right? Why it has a moat, I haven't never been into one of their business, but if you're in the States, probably you can tell me a bit more information. Doesn't scream cheap to me, but it seems like a quality business and very recurring revenues. The buy, MasterCard, what to say about MasterCard? A ridiculously good business. Do you see this like return on assets and equity, the margins? Very, very good business. Also very wide moat. If you haven't dived deep into some of the thesis posted on YouTube or online for MasterCard, and you will see what to look when seeking for quality in a business. The moat is also very interesting how it developed. Is it cheap? Probably not, but over a long enough time frame, maybe it is, right? So I don't know, not much to say. 400 billion market cap, very, very huge cap, and 18 billion in revenues. I don't know, it's hard to say a lot, but if you see this has been going on forever, right? this process, and do you see the margins? Ridiculous. For the long term, you only have to think about how it's a sector with a lot of disruption, so think about that, right? But if you see them holding on forever, this business is ridiculous. Then we have David Katz from Matrix Advisors Value, 30 positions, so a bit more concentrated portfolio, 70 million in dollars under management. Microsoft, Alphabet, JP Morgan, Qualcomm, Apple, Goldman Sachs, CVS, so all very high quality business. So he bought some Becton Dickinson and Viacom CBS, right? Let's check them out, right? So first one, Becton Dickinson and Co. The business, this is they supply material for the medical field. They have 3 different segments, which is medical, so they supply like IV tubing, needles, syringe, 52% of revenues, and they sell to hospitals, pharma, biotech companies. Then they have the diagnostics ones, where they collect blood and urine supplies, right? So along with diagnostic systems and technology for microbiology detection. They sell mostly to hospitals in this one. And then biosciences, the laboratory research machines and reagents kits, they sell to laboratories and private kind of biotech companies, right? For this company, I've done a bit of research, a bit more than others. They focus on the entire range from low price products to high price products. They sell 55% of sales to the United States and the rest international, with 22% in Europe, right? 72 billion market cap, so it's not a small company. 20 billion in revenues and pretty good margins, like if you see here, trading at 36 times this year's earnings, or 21 next year estimates, right? So not too cheap. It doesn't appeal me to being very cheap, but probably there's a scale mode here and high replacement cost mode. Let's see. If you see the revenues, they never stop going up, because I think these kind of products will need for many years, right? So then we have Viacom CBS. Well, they merged it with CBS last year. It hasn't looked pretty, as you can see. Not sure how positive it was for either CBS or them. It's a business hard to value because it's very mature, but there's a lot of disruption at the same time. They are trying to get like their portfolio of content like CBS, Showtime, Paramount Pictures, Nickelodeon, MTV, to get those like on a subscription kind of thing. Like it's been the trend lately. 20 billion market cap, 26 billion in revenues, very low P's because I think the disruption is getting there, but it's a business with decent margins, good margins, right? So I don't know, very, very hard to value. That was the last stock that we had for buys in January. If you're new to the channel, what I also have is a portfolio that I add 1,000 or 500 euros every month. At the moment it's at 25,000 euros. And in the last month, probably it's the least smart investor edition that I've done, because I've done plenty of trades. So 8 trades I sold from not the lowest conviction stocks, but I've sold from TK Tankers, from Intel and Berkshire, to focus on the stocks that I think have a bigger opportunity, like is Naked Wines, like is Shinoken Group, more Shinoken, more Naked Wines, and then RA International, another unknown company that I've done a thesis on the channel. So if you're interested in more smaller kind of companies, smaller cap, check it out, right? How the portfolio is sitting is a more concentrated portfolio. I was very jealous of Munger with this concentrated portfolio. I wanted to have the same thing. So 6 positions, let's see how it goes. This is on 31st of January, 25,400 or almost 500 euros, almost 2,000 euro gain, 8% appreciation. We haven't had the best start of the month. We have had much higher appreciation on this portfolio previously. The money weighted rate of return close to 8%, and we started in July 2020, right? And keeping adding the money, right? If you're interested in seeing how I'm doing, every time I make a move, new move, I will make a video about it, why I made it, and all the thesis on the new positions and so on. So if you like this kind of content, you want to see more, leave me a comment, like, subscribe, and don't miss out. Thank you very much. See you.